So as Dan said in his introduction, what I'll do is just give a very brief overview of our research program as a whole and also our policy guide. So I'm just going to take 7-8 minutes to do that to keep us on time for the next presentation at 2 o'clock, and so that we get to the break at 3:15 in case anyone here during the break wants to join the hacky sack game that's going on right out here on campus. So they give you a physical break there as well as a mental break. But to give you an overview of our research program, Dan explained it very well. Our structure is, and I hesitate to say that this organizational structure is brilliant, but it has worked very well for a nonprofit state-based think tank as we are. And that is to create issue centers, each of which is headed by a trained professional or a full-time policy analyst, and you'll be hearing from them later today. Washington Policy Center is, in fact, one of the largest members of the State Policy Network. So in all 50 states now, and this movement has been going on for about 15 years, there is an independent, free market, state-based, nonprofit, bipartisan think tank in all 50 states. Some are smaller, some are larger, but there's a whole professional ethic around how to organize a state think tank and how to work with state government, and we're emulating that here with our model. So speaking of the model, so we have fundraising like any other nonprofit, but the academic work, again, is the focus of our researchers. What we found is, boy, follow the facts, use sourcing. I kind of jokingly say, make sure you don't publish or say anything that you know is not true. It's a very simple guide. And while we are a principled organization, that is to say we believe in the principles of the free market, we think there are efficiencies from the competitive private market that can be inspiring and can help with public services, we're not ideological. So we're principled but not ideological. If the facts do not support an idea or a thesis that we have, then we won't pursue it or recommend it. One good example I'll give about the role of government, just the obvious examples. Public safety is obviously a role of government. So we would say that's something government should do. And guess what? The model across the country, all the data, all the facts, all the experience supports that. So we wouldn't argue against that. On the other end of the spectrum, and I'll return to this later when I'm talking about the small business environment, we do raise questions like, why does the state run its own monopoly workers' compensation insurance company, which is inside state government? I could make the same example of why does the state run a series of monopoly liquor stores across the state, and the voters have just decided to move that to the private sector. So that's at that end of the spectrum. In the middle are functions where you could, for example, the Department of Transportation can be more efficient. It's a government function, but contracting out can make it more efficient. A physical example would be the Washington State ferries. Again, a Washington State monopoly. Okay, but there are services like passenger services, reaching communities that now do not have ferry service that could possibly be contracted to the private sector. So there's, in other words, we approach this as a mix of what is achievable and practical that serves the public interest in our state, not as something dogmatic that there's always a for-profit private company that wants to come in. And by the way, our critics, more on the left, tend to take that point of view. Oh, you guys are just a shill for business. All you want to do is, help for-profit companies. That's not the case because there are a lot of government services that for-profit companies can't do. And then secondly, and we see it in the news all the time, for-profit companies make mistakes. They lose money. They go out of business. And there are public functions that can't go out of business. So we understand these basic principles even before we start doing our research. Quick overview of the policy guide. As Dan explained, this is our 4th edition. This publication, which, by the way, is daunting for a nonprofit organization. When we first started off on this, we were like, can we even publish this book? So the first edition was inspired by, in a way, we respond to our marketplace. We were hearing from public officials, state legislators, people in the public policy world, reporters who were saying, what is your position on transportation? What should we do about protecting the environment? How about education reform? We had done a lot of studies and research on those areas already, and we pulled them together in an organized format, a single reference book. Even the binding we chose because it will conveniently lay flat. You can fold it back. We've seen legislators with this publication on the floor of the legislature during the session, having it open or breezing through it. So we make it very convenient. The contents are also convenient. So it's divided into 10 issue chapters. Each chapter is divided into subsections. Each subsection is about 3 or 4 pages. very readable, accessible, plain English, which is another one of our standards. At the end of each subsection are specific policy recommendations, 2, 3, 4 ideas with just a single paragraph that describes what we think we should do. As you know, as candidates for public office and people who are in public office now, the shorter the conversation, the better for them. They're like, what is your bottom line? What can we do to improve K-12 schools? What should we do about higher education? And that's what this publication is designed to do. So I hope you find that useful. The last point I'll make about this is, I guess I would urge you to read the introduction, even just pages, I wrote it, so of course it's the best part, pages 3 through 7, very short, which is an introduction that lays out what I've been describing. What are Washington Policy Center's 5 basic principles of government? Ideas that we think all policymakers at the local and state level, even the federal level, should keep in mind whenever they're considering bills. At the end of the introduction is a list of 10 questions, again, very common sense. What is the impact on the taxpayer? What are the interests that are involved? That 10 specific questions that any lawmaker should ask about a proposal or a bill that's before them, and so that's our basic advice. Regarding practical things coming up, so as you saw in the video and as Dan described, our product, our publications are studies, short 2-page policy notes, op-eds, blogs, media interviews, and that's the way we get our ideas out to the public. We'll be doing that through the summer and fall this year. We also do specific publications about proposals that have qualified for the ballot. So we wrote an overview of the liquor privatization ballot measure that explained how it would work. Issues that we see coming up is, famously, Tim Eyman is doing the 2/3 vote to raise taxes initiative. This has passed 4 times in our state before. We have made a policy recommendation that be made, that the legislature and the people adopt that as part of the Constitution. But, so we're not constantly revisiting it. But in the meantime, Eyman has decided that this is going to be his ballot initiative. He usually succeeds in getting the signatures, so we foresee that coming up on the ballot. Just a few days ago, I'm sure most of you know that a charter school initiative swept out of nowhere. It appears to be very well funded and supported. July 6th is the date to turn in 250,000 signatures to qualify for the ballot. And so we'll be following that process. Again, we don't lobby or advocate, but charter schools is an idea that we support. So we'll be seeing how that measure does. If it qualifies for the ballot, Leave on our staff will be writing an overview of how it would work, and again, that's to inform the public. And maybe the last point, and this is a good segue for this, is when I mention a citizen's guide that we write about a ballot measure or a study that we do about a bill, we basically provide 2 things. One is a basic and, believe me, fair description of what the proposal says. One of the most common intellectual traps is what's called a straw man argument. That is to say, and you all know this, I misrepresent your position, so it makes it easier for me to knock it down. So this is a pitfall that we assiduously avoid at the Washington Policy Center. So one of our analysts is writing a description of a ballot measure. Our standard is write the description the way the sponsors would have written it. So if they read it, they would agree with the way we're presenting it. The second part is our analysis and even our opinion as to whether this is good public policy or not, but we always make a distinction between the two. The way this carries out in our day-to-day work is when a reporter calls us or emails us with a question about, let's say, property taxes. I've had this question, are property taxes soaring, as Tim Eyman says? I've received this challenge. What I say to the reporter is, I can provide you with 2 things. Property taxes are complicated. Would you like me to just explain it? I understand that you just got this story assignment this morning, so do you want me to just tell you how the system works? And secondly, I'll give you our opinion about whether this is a good idea or not. Invariably, as you would expect, the reporter says, I'll take both. Years ago, there was a note of suspicion. Aren't you guys conservative, limited government? And that's where I would say, well, we have principles, but if you want us to just describe how healthcare reform works, how is education funded, what is our clean energy policy in this state, our experts will just explain it and then provide the information after that. So with that, we're a few minutes after 2. So what I'll wrap up with is to point out that with the changes in technology and the world of the media, which you've seen in the growth of the internet, is that Washington Policy Center has become not by any strategic plan from us, literally partly a media organization. I mean, we are not founded as a media organization, but we have slipped into this role because the diversity of sources for news has expanded so much over the last 10 years, let's say, that now our staff commonly breaks news just in the research that they're doing. We have an active blog, or by putting out information. Often we're the first one to talk about it, even though that's not our primary mission, but we're tracking the issues closely. And secondly, that we're seeing that we're perceived that way as a fair source of what's going on, in addition to our policy recommendations. So I'll embarrass Jason a bit here, who's sitting in the back, that he got an email communication from the spokesman for the Secretary of State's office asking, I'm sorry, if I got this correct, he contacted the sponsors of an initiative saying, I've had a media inquiry about your initiative and I'd like to send them an answer. This is the Secretary of State's office. The media inquiry, so to speak, came from Jason. He was doing research on the initiative. The Secretary of State's office contacts the supporters, could you answer this question? And that's a kind of media, that was described, I should say, as a media inquiry. So although that's not something that we planned, we find that our staff has so much expertise on the issues that they often fall into that role. So with that, having highlighted you, Jason, let me turn it over to you. Oh, Roger, I'm sorry. And then Jason after that, okay. So Roger on healthcare.
Thank you. Well, I'm Roger Stark. I'm the healthcare policy analyst at the Washington Policy Center. I'm also a retired physician. First of all, let me just thank you folks for running for office. I know this is it's a huge undertaking for you, for your family, from the time, financial commitment. I just want to thank you for doing that. Someone once asked Will Rogers, they asked Rogers, they said, isn't it difficult to be a comedian? And he said, no, not necessarily. He said, when you have the entire government working for you, it's pretty easy. So just the fact that you're here today, you want information about the issues, you want information about policy, shows that you're off to the correct start here in running your campaign. Let me take care of a couple housekeeping things. In your packet, one of the things you will find is an impact study that we did on the Affordable Care Act. And this is a 4-part series that we actually compiled to put this together. And it gives you an idea of what we see as the impact of the Affordable Care Act, the federal health care reform, on the state of Washington. And we looked at various groups, small business, young adults, Medicare, Medicaid, and so forth. And we came up with this policy brief. The other thing, from a housekeeping standpoint, Dan referred to our healthcare conference, which will be July 10th in Seattle for a half a day, and then a luncheon July 9th in Spokane. We are really excited this year. As Dan mentioned, the Supreme Court will come out with their ruling on the constitutionality of the Affordable Care Act in mid to late June. And so we are going to have one of the first healthcare conferences in the nation dealing with that ruling. We've got our legislative review panel, which will deal with state issues, but then we have 2 panels that are going to be very exciting. One will deal with the state health insurance exchange and how that's going to be affected by the Supreme Court ruling. And then our second panel deals with the impact of the ruling on provider groups, on hospital groups, on small business groups, and so forth. And again, we're pretty excited about that, coupled with the fact that Bill McCollum is the featured speaker, and he was the point guy on the major lawsuit that the Supreme Court heard arguments on in March. So again, we're really pleased about that. What I'd like to do from a policy standpoint here is discuss just a couple of issues, and it really doesn't matter whether you're running for federal office or state office or even local office. One of the huge problems that we face in this country is with Medicaid. And over the last couple of years, we have done several in-depth studies of the Medicaid program and then what we consider to be fraud and waste and abuse in the Medicaid program. And so we're pretty familiar with that, and we see this as being one of the key issues going forward for the state of Washington and for the country, actually. For virtually every state in the country, in the state of Washington, it's the number 2 budget item. For virtually every state, it's one of the top 2 or 3, and for Washington, it's the second budget item, Medicaid and our health care delivery program on a state level. Now, just as a little background here, I won't bore you with a lot of history, but it gives you a little bit of foundation. Medicaid began in 1965 as a safety net program for children of poor families. Families that made less than 133% of the federal poverty level qualified for Medicaid. Now, in 2012 dollars, that's about $28,000 a year for a family of four would qualify for the original Medicaid. Medicaid began as an entitlement, and consequently, Congress, when they passed this legislation, they really had no idea of how many people would qualify. In other words, if you met the criteria, then you could become an enrollee in Medicaid. They estimated that the cost for the first year would be about $500 million. The actual cost the first year of Medicaid was $1 billion. And by 1970, 4 years later, the cost of Medicaid was $5 billion. Last year, we spent about $430 billion on Medicaid, the existing Medicaid program, and it is anticipated by the year 2019, we will be spending about $900 billion. In other words, more than double by the year 2019. Now, again, as background, when Medicaid was set up, it was set up as a 50% federal taxpayer program, 50% state taxpayer. And Congress, in their infinite wisdom, they said, okay, if we draw the states into paying for this program is not going to take off. Costs are going to be controlled because the states are not going to want to add more tax burden on their state taxpayers. What happened was the exact opposite. States looked at this program and they said, gosh, if we spend $1 for education, we get $1's worth of education. If we spend $1 on our Medicaid program, because of the federal match, we get $2 worth of Medicaid. And that is the reason that Medicaid has just exploded over the last 40 to 45 years. The other things that have happened down through the years, there have been waivers. Originally, the language in the Medicaid bill from the federal government said, we will allow you, Mr. State, to do this. And now that language is different. And now it says, you are required to do this, whether it's an added benefit or cost or whatever it is. Also remember, Medicaid started at 133% of the federal poverty level. For most states now, that level of entrance, level of enrollment is between 200 to 300% of the federal poverty level. So again, you can see how this entire program has mushroomed beyond anything that was originally planned. Now again, originally it was a safety net for children of poor families. Today, 70% of the enrollees in Medicaid are children of poor families. 25% of enrollees in the existing Medicaid program are the disabled and long-term care. Now, if we flip this and we look at where the dollars are, it's the reverse. 75% of the Medicaid dollars are going into long-term care and disability programs on a state basis, and 25% of the dollars are going as a safety net for kids of poor families. So you can see how that's just reversed itself. Now, down through the years, what has Medicaid done then? Well, it's discouraged a number of individuals and a number of things from occurring. First of all, it's discouraged employees from seeking a higher paying job. Because if you bump past the enrollment criteria, you lose your Medicaid enrollment. The second thing it's done is for employers of low-wage jobs, it's told them that, oh, I don't have to provide health care benefits because my employees qualify for the existing Medicaid program. So it's discouraged employers, it's discouraged employees. The third thing, and we're seeing just sort of the tip of the iceberg here, but it's going to explode, it is discouraging private insurers from long-term insurance plans, and such that eventually, if the trend continues, Medicaid is going to be the only insurer on a long-term basis. And then the fourth thing it's discouraged is philanthropy. People look and they say, well, why should I give to healthcare charities, or why should I give to the poor for healthcare? I'll give to the arts, or I'll give to my church, or whatever it is. So it's discouraged philanthropy as well. Now, let me also say that a huge part of the Affordable Care Act, 50% of the dollars in the Affordable Care Act, are going to pay for an expansion of Medicaid. 16 to to the last estimate, 26 million new people will be enrolled in this already bankrupt program of Medicaid. And, oh, by the way, the Medicaid program, not only is it bankrupt today, but our Medicaid patients are having a very, very difficult time accessing health care because the reimbursements for providers are so low. It's a provider reimbursement in the Medicaid program is about 40% of what private insurance pays. And our providers today can't keep their doors open. And so what we're going to do with the Affordable Care Act is we're going to add 16 to 26 million more people into this already existing bankrupt program. So again, that's a thumbnail sketch. Whether you're in the state legislature or the federal government, you're going to have to deal with Medicaid. What we see as answers for Medicaid, and there are solutions. The first thing we do is let's drop Medicaid back to the 133% federal poverty level. Let's make it a true safety net. Let's also give control of the program back to the states. And the way you do that is through what are called block grants. Instead of $1 for each individual patient or a few dollars for each individual patient, let's have the federal government give each state one check, one big check of money, and let states decide how they're going to use it. And then what we see at the Policy Center as answers are using things like vouchers, giving the dollars in Medicaid to the individual patients, letting them find their own insurance, high deductible, use of health savings accounts in the Medicaid program. And then the other thing, let's eliminate waste, fraud, and abuse. And then before we add 16 to 26 million more people, let's also repeal the Affordable Care Act. That's huge in this entire Medicaid discussion.
Now, the other thing that they did, the other magic bullet they found to balance this budget on paper was this $120 million right here, assumed reversions. Anybody know what a reversion is? So each year, the legislature appropriates a spending authority for agencies. Now, with the exception of higher education, which spends every last cent that we send, most agencies don't spend all of that, so money reverts back. Now, in the past, that money went to dedicated accounts. This happens usually about $50 million per year, so it's not unheard of to have reversions. But what's unusual about this is the legislature actually put on the balance sheet, we're going to give you budgeted authority $120 million higher, but we're going to hope you're not going to spend that. So the accounting maneuver of $238 million in local sales tax revenue and $120 million in hoping agencies don't spend their budget authority gives you this whopping $45 million reserve. You don't have those two accounting maneuvers, you have a negative budget by over $300 million. So as you can see, not exactly something you would call sustainable. But on paper balanced, no major gimmicks, just accounting maneuvers, and no across-the-board tax increases. Now the other big fight, besides whether or not we should use the skipped K-12 payment or the skipped pension payment, was should this budget institute reform so that we don't have to go through next year and the year after that and the year after that what we've gone through the last 4 years. I hate to tell you, if you still decide after this great budget news to run and become a lawmaker, you are going to be dealing with this for the next 4 years at a minimum, even with the reforms they passed this year. One of those reforms was a balanced budget requirement. Prior to this year, we were one of, I think, 2 states that did not have a balanced budget requirement. The governor had to propose a balanced budget, but the legislature did not have to enact one. Now, in practice, we usually did, because, again, that's another quick way to get your credit rating downgraded, but we had no statutory requirement. Now, initially, the sponsors wanted a constitutional balanced budget requirement, so a legislature couldn't suspend it to do deficit spending. That could not get through the House. What they came up with was a 4-year budget balance requirement with massive loopholes. So, in 2017, if this law still exists, we will have a balanced budget requirement, but we will not until 2017. The biggest reason for that is you may have heard about a K-12 adequacy lawsuit, the McCleary decision. All the funding associated with that lawsuit does not have to be accounted for underneath the balanced budget requirement, which basically allows them to increase spending because they don't have that bow wave cost they have to account for. In 2017, though, they will have to account for that. The other loophole that is in the balanced budget requirement, collective bargaining agreements. And basically supplemental budgets, they don't have to be accounted for. So if you do have another special session this year,
whatever budget they adopt will not have to be balanced. That was one of the other loopholes. Now on collective bargaining, it's one of the reforms I want to talk to you about. Prior to 2002, lawmakers actually got to be appropriators. They actually got to have people come to their committees, make their best case, and prioritize the budget. In 2002, for some reason, legislators decided that they didn't want that authority any longer. So they passed what was called civil service reform that allows the governor to negotiate behind closed doors exclusively with state employee unions on compensation. Whatever agreement is reached, that's the end of the game. Legislators can't change that. You can't amend it, you can't make adjustments to it, you can't reprioritize in the budget. All you can do is say yes or no. Now, under the law, those contracts are supposed to be submitted to the legislature to ratify. That has never happened. Instead, they get rolled into the budget. So the only way you can reject that contract is to reject the budget. But as you've noticed, the legislature does not do the budget in a timely way. They usually wait till the last moment. So what happens if you reject the budget and reject those contracts? You're going to have to wait for those negotiations to start again. So that's just another incentive for the legislature not to reject those contracts. Now we know that we're either going to have Governor Inslee or Governor McKenna next year. But Governor Gregoire is the one negotiating the contracts for the 2013-15 budget. So the next governor will not get to change those contracts until halfway through their first term. This needs to change in several ways. The first of which, you need to realize unions are not bad people. Union leaders are doing the job that they are elected to do. Their job is not to come up with sound public policy. Their job is to represent their members and get the best potential deal they can. It's the job of the legislators to make sure that when that union official comes to make their pitch, they're sitting at the table along with every other group asking for money. And then you get to prioritize how those resources are allocated. So at a minimum, if that 2002 law is not repealed, the legislature needs to take back control of the compensation decisions. You could still allow the unions to negotiate exclusively with the governor on working conditions, but all compensation issues should be part of the legislative budget process. Now, on the other reform I forgot to mention, for those of you who are school board members or education advocates, you may recall in 2000 the voters were asked to pass a free education initiative, Initiative 728. The state was sitting on a multi-billion-dollar reserve, and we were told we can reduce class sizes without ever hurting the budget, without ever raising taxes. It's free money. Why wouldn't we do it? Well, then you had 9/11, you had the dot-com bust, and that reserve went away. So basically, every year since then, the legislature has suspended that obligation. But it still shows up on the balance sheet. So part of these cuts that you hear about are just not providing funding to that initiative. Now, the voters were asked, because the unions that supported that measure were very unhappy with the fact we had 70% of the electorate approve this, and you are not funding this. So in 2004, they went back to the voters and said, you really wanted this, but we didn't have a revenue stream. So let's raise the sales tax by $1 billion, because we know this is an education priority that you want. The voters rejected that statewide. In 2010, the same interest groups came back and said, well, maybe everybody doesn't want to pay for this, so let's just raise the income tax in the top 3% of the state and let them pay for it. Again, the voters across the state rejected that, with the exception of Island County. So if you're asking me what's the will of the voters, when it was free, they wanted it. When they had to pay for it, they didn't want it. So the legislature this year finally repealed, not suspended, but repealed Initiative 728. By doing that, they took $1 billion off of the next budget's cost. That's how much that was accounting for of unfunded mandate. The reason the unfunded mandates are important is, as lawmakers, just like I mentioned with the collective bargaining agreement, everything is a priority to somebody. There's no line item in the budget that isn't somebody's best idea under the sun that's important. But you have to have the ability to make decisions on what you can afford and can't afford. And if you can't afford it, repeal it. Don't pass that decision off to the next legislature to try to figure out how to come funding it. So that was a good positive development. The only reason we had a conversation about budget sustainability, structural reforms, not raising taxes was because of, as Paul mentioned, the 2/3 requirement to raise taxes. 4 times, 4 separate occasions, the voters have had to pass that. And the reason they've had to pass that is even though it's a supermajority requirement to raise taxes, after 2 years, it only requires a simple majority of the legislature to suspend. Now, I use the word suspend on purpose. The legislature has never voted to repeal the initiative. Even when they've had the margins to do so, they've said we need to honor the will of the voters, but we just can't do it this year. So we saw in 2010, again, for the fourth time, the voters say we want a supermajority to raise taxes. That's why these conversations about sustainability and reforms had to take effect, because it was too difficult to raise taxes. Now, realizing they can't win at the ballot box, several members in the House staged a drama on the floor on a tax bill they knew never would pass, but they wanted to create a transcript to be able to sue the voters to have that law overturned. That was heard last month in King County to declare the 2/3 requirement unconstitutional. It's pretty clear the judge is going to come to that conclusion, which means now we're going to have a Supreme Court ruling in the next year on that. In the meantime, you're going to have the voters have the fifth opportunity to vote for the 2/3 requirement, which is why we're advocating. Obviously, the voters want this policy, unless they've been confused the previous times they've supported it. Let's put it on the ballot, winner take all, once and for all, as a constitutional amendment. If they adopt it, we can finally get off this roller coaster, we can end this debate and realize they do want a high threshold to raise taxes. If it's rejected, the legislature with a clean conscience can ignore every future initiative that tries to do this, because when it really mattered, the people didn't put that requirement into place. Now, there's a precedent for this, especially for lawmakers who don't support the 2/3 requirement. Previously, it required a supermajority vote to raise school levies. That was part of our Constitution. The voters, I believe, in 2005, does that school number sound right? Were asked to remove that supermajority for school levies down to a simple majority. The majority of the debate in the legislature on putting that on the ballot wasn't about, we think this is a good thing, we support this. We just need to let the voters have the opportunity. You could use that same precedent for doing this, and especially since the voters will probably, by the time the next legislature is sworn in for the fifth time, say we want a supermajority to raise taxes. So that is a brief crash course on the budget and some of the structural reforms. The final thing I'll leave you with, legislative transparency. How many of you would vote for a bill that looks like this? This is called a title-only bill. Now, some poor lobbyists actually came up and testified on one of those bills and got up there and said, you know, I could be for this, I could be against this, I just don't know yet. Well, you know, and the committee did that. The committee passed the blank bill to the floor with the intent of adding taxes to it later. And it was only because of the public outcry that they held a work session on the details of what they really wanted to do. So what we've been advocating for is you ban title-only bills. The other thing you need to do is, whether you're from Eastern Washington, from Bellingham, from Vancouver, you need to have the opportunity to come to Olympia and to testify on the proposals being made. Not just to come and testify, but testify on the actual details under consideration. What happens right now is the legislature will give a 5-day notice that we're going to have a public hearing. But they won't tell you the details of the bill they're going to hear. And if they're even kind enough to tell you that, you'll show up and it's a striker amendment. As somebody who testifies on request, I can't tell you how frustrating it is to show up at a committee to testify, all prepared, only to find out after the hearing starts the bill details are entirely different. So what we're advocating for is the legislature right now gives a 5-day notice. Let's meet them halfway. Put into statute a requirement to give at least 3 days public notice of the actual details of the bill you're going to be hearing. Post it on the web, available for anybody to get. Now, after the committee passes that bill, it has to sit for at least 2 days on the floor so lawmakers can actually make amendments and know what they're voting on. And then after you have passed both bodies, you go to your conference process, it sits for 24 hours. So that you don't have what happened this year, where bills are being written on at 2 a.m. in the morning and voted on at 2:20 in the morning.
Okay, so as Dan mentioned earlier, Erin Shannon is the director of our Small Business Center. She's been on board with us since the beginning of the year, and in fact, she's been doing a tremendous job. She embarrassed some of our other center directors by actually, I think within 30 days of employment, she had testified more times in Olympia on our research, had met with more lawmakers, and she just came out of the box. It just happened to be that the topic she was working on kept her very busy. She's not feeling well today, so I'm going to cover some of her main topics. So what I'll do is give you a presentation basically in 2 parts. One is to just talk about where the economy is today, because what lawmakers have been depending on for 3-4 years is the economy coming roaring back after the recession, and that just isn't happening. As Jason mentioned, the federal stimulus money that the state received was meant to tide the state over until growth in the economy brings back the normal growth in revenue that lawmakers had expected historically. That would be 7-8% growth in revenues, whereas more recently it's been more like 1.5 to 2%. So revenue is still growing, but it's just growing slowly. One way I think of the $4 billion that Jason mentioned as federal stimulus money that arrived from Washington, D.C., the reason that we believe that should not be counted in the base is that, to give a historical example, this is like Sir Francis Drake sailing into your harbor in England with a ship full of Spanish gold. Okay, it's just delivered. But that's not actually a sustainable revenue source. So Jason is correct that if you look at total spending over the last few years, the current budget is cut or flat. But if you look at the sustainable tax base that the people of the state are providing, spending is actually increasing by a couple of % every budget cycle. So that's just to put that in context. Excuse me. Actually, there's a good article in the Wall Street Journal today that just gives a great overview of what's been happening with the recovery and coming out of this recession. So I'll give you that just very briefly. So in the last 60 years, we have had 11 recessions of varying degrees of severity. The most recent one is one of the most severe recessions, but the recovery has actually been the slowest of the 11, which can be measured in a couple of different ways. So first of all, one way to measure it is what most people consider most important is job growth. So the current recession, the current recovery is the second slowest recovery. That is second from the bottom of the 11 in job growth. The average for all the recoveries is 6.5% job growth annually. That's historically. Our current recovery is 1.9% over 34 months. So actually the 6.5% figure is over 34 months. So it's the same time period, about 3 years into a recovery, how many jobs has the economy created? If you'll remember, or if you've read back in the 1980s, by 1984, I mean, economists have a term for this. The economy was on fire. I mean, it was literally, through the 80s, the economy created 23 million new jobs. We had a recession in 1990-91, but the same thing happened during the 1990s, and that's when the tech boom took off, and for various reasons. So those are periods when 7-8 year period when the American economy is just producing jobs like crazy. We have not gotten to that rate of growth by any means. So that's job growth. Regarding another measure, which is GDP growth, so that's just expansion of the economy. Again, the average for 10 recoveries in the past over a 3-year period is 15.2% growth. So about 15% growth over 3 years, very respectable. That's a measure of prosperity. The current recession growth over 3 years has only been 6.8%. So you can see that that's less than half of the rate of recovery that we would expect from the past. The reason this creates a headache for lawmakers in Olympia is because of that growth in revenue that they're looking for. So they're trying to maintain the state's commitments. We have an analysis about how much the state has taken on in terms of health care programs, other programs, and whether there's the revenue there to sustain that. That's a policy question. The fiscal question is the slowly growing economy going to produce enough revenue in order to balance the budget going into the future? And that's the problem that state leaders face right now. So what makes this recovery different? Certainly in the past, historically, the economy depended very much on, and there have been books written about this, about the business cycle, even going all the way back to the 1800s, boom and bust cycles. The United States has been through tremendous downturns in the past. 1893 was one, which, by the way, wiped out about a third of the businesses in the Seattle area back in the 1890s, and then they had to rebuild from there. So even before the Great Depression of the 1930s, economies had academics and economists had seen that there was this cycle. What's different today is that the cycle is not so much influenced by market forces, those are important, but more by policy considerations. So the role of lawmakers, both federal and state, in setting policies creates the business climate in which small businesses, large businesses, all entrepreneurs work in. And the example I would give to illustrate that is one of the fiscal tools that the government has through the Federal Reserve is setting the interest rate. And interest rate is, as you know, is the price of money. Okay, so the government can actually set the price of a loan or capital investment. And again, as you all know from following the news, the Federal Reserve has committed to keeping the interest rate at basically zero for the last 2 or 3 years, and that's where it is now. Bank-to-bank lending is practically free. The government has said that it will lend to large banks, again, what's called an overnight reserve rate, again, practically for free. It's 0 or 0.25%. With the price of money being so low, you would expect that the economy would be growing because people can borrow, invest, expand their business, and that's not happening. So that's the disconnect that I'm describing between recoveries in the past and the slow recovery that's happening right now. So the question would be, why is that happening? Why is that disconnect occurring now? I think the reason is that, 2 reasons. Number one, with interest rates being very low, what consumers and even business people are doing is not launching new ventures, they're reducing debt. So for homeowners, this means refinancing. So getting out there trying to reduce your mortgage debt. For consumers, who are also homeowners, but it also means reducing credit card debts, paying off college loans, or whatever debt that an individual might have. For businesses, it means, again, reducing any debt from past loans and holding on to cash. So you read this certainly at the national level with large corporations, Microsoft, others, that they have billions of dollars of cash. Sometimes they're criticized politically. Why are you holding on to so much cash when you should be out there hiring people? Which leads to the next point. I think the reason that policy affects economic decision-making so much is because of uncertainty and nervousness about the future. So whether you're running a small business with 3 employees or whether you're Microsoft, you are looking at the same state and national conditions regarding what the economy is offering you in a way. What is the environment going to be like 6 months from now, a year from now, 18 months from now? If the policy community, in a way, is not signaling it's okay to, and by the way, I think this is what happened in the 80s and in the 90s. It was like green light for everything. Spend, borrow, grow, hire, because there was this tremendous enthusiasm and confidence about where the economy is going. Today, in contrast, both at the state level and nationally, there are so many question marks for the entrepreneur, for the business planner, as to what is my tax burden going to be like a year from now. Again, at the national level, we're having a national debate about, do wealthy people pay enough on their taxes? Should it be higher? Should the Bush tax cuts be repealed or not repealed? Whichever way those questions go, it's an unanswered question. It's an open question. What is the cost of hiring? What are mandates that go along with new employees? What is the cost of health care? And you heard Roger give the presentation about what's happening with the national health care legislation, the growth of the Medicaid program. In our state, our legislature has been on the leading edge of states nationally in creating a health care exchange. So we are moving forward on this road. We're one of 4 states that have enacted a health care exchange, and it is being set up. You can see by this list of questions that purely non-politically, in a bipartisan way or nonpartisan, if you're a business owner, you're really wondering if now is the time to begin to grow or to retrench. So I think that's the situation that we're in right now. So that covers that uncertainty. So where does that leave Washington State, and what recommendations does the Washington Policy Center have? So few general points about the way we recommend public officials approach the small business climate and job growth. First of all, we like to point out a common sense principle, which is if you make something easier, you're going to get more of it. Another way to put it is that if you lower the cost of something, you're going to get a greater supply of it. And that is certainly true of business activity, investment, and job creation. So if you ease the way to creating a job, you're going to get more jobs. This is our arguments for regulatory reform and fewer mandates. The actual source of this is published in a short study, 7 Steps on the Road to Economic Recovery to Create a Better Business Climate. What this report grows out of is a meeting that we hosted of small business owners from around the state. for a conference in which we went into it as researchers with an open-ended question. We didn't have an agenda as to what we thought small business owners should support. We had breakout sessions and discussion where we asked them, in your day-to-day experience, what do you see as the major areas that are an impediment to you growing your business, particularly when it comes to public policy? So what I'll do is just summarize some of the points that, and you can read the details. Again, you'll see short, readable format, and this is the response that we got from small business owners when we asked this question. But one of the recommendations that we have is to, and wherever possible, to end state monopolies that are commercial monopolies. The most obvious one is the workers' compensation system. From a global perspective, we made a comparison between Washington State's single state-run workers' compensation system and the more competitive, open-ended system that's used in other states. Sometimes you'll hear a phrase that's used for workers' compensation which is called three-way. So that would be private companies, the state, and self-insured. States like Idaho and others, they have this. What Washington State has is basically what you might call two-way. If you're big enough, like Boeing, you can self-insure. If you're not big enough, there's a one-stop shop. You go to L&I and you sign up. It's mandatory. They tell you how much of your payroll you have to pay in premiums. The benefits are set by the legislature. It's all basically run by the government. Our proposal would be, at a minimum, to allow the private market to offer workers' compensation coverage, which would meet the state standard. So lawmakers would define workers' compensation coverage has to be at these benefit levels for X number of weeks, and that private companies would be invited into the state to offer those on a competitive basis. Again, and our view is whatever serves the public best. If L&I is offering the best coverage, then choose that. If a private company is offering better coverage or cheaper coverage, choose that, as long as worker protections are preserved. So we think the best role for lawmakers is to define the public interest. Workers should have a certain amount of coverage. The method that an employer uses to get that coverage should be left up to them. So that's the principle we have there. The legislature did pass a reform which allows workers who have been long-term injured to opt for a different kind of settlement. So again, this is a subset of the monopoly system that I'm referring to. In the past, if a worker was injured, he has a settlement. He's going to receive a certain amount of money every month, for the rest of his life, basically. That is set by the state, and that doesn't change. The worker has no options, just basically take it or leave it. The reform that was passed would allow workers to receive their settlement in a lump sum up front, all or in part, which allows them to have basically an equity stake in their own settlement and to control it. The legislature passed a version of this, which is going to save about $600 or $700 million over 4 years. There was a Senate proposal which passed the Senate, which would have saved $1.2 billion over 4 years. We thought that was the better recommendation. That option is still out there. But saving $1.2 billion in one state program over 4 years, if you do the math, results in effect is equal to a $300 million tax increase for the state every year. And imagine the political firestorm that there would be if the legislature actually just tried to raise that amount of money. In fact, it almost certainly wouldn't pass. So this is an example of where the state can change the way it does business and actually end up with more revenue. Other recommendations we have is reform in unemployment insurance. Same thing, try to reduce costs. The good news is that workplace safety in our state, the injury rate, is better than ever. So Washington State is a safer place to have a job than it has been in the past. And yet the cost of running the state program is up about 50% compared to a few years ago. We also recommend regulatory reform. This is the streamlining, reducing the burden of state regulations, make it easier to create a job. One standard we have is don't add to the federal burden. So every business in the state already has to comply with federal regulations, and the state lawmakers should be careful not to add on top of that. You get a cumulative effect. Roger mentioned tort reform. That's described in detail here. Again, just a few paragraphs to describe the issue. And that's to control rising health care costs for employers. And then the last point I'll make is about not imposing new mandates. So an example coming out of Seattle is that you may have read the Seattle City Council last year, I think it was, passed a mandate saying that all employers in the city of Seattle with more than 3 employees has to allow a certain amount of 7 days of paid family leave. That sounds great. You know, I've been an employee my whole life as well. So to have, to be on the receiving end of benefits initially sounds good and generous and caring and pro-family. But when you look at the details of it, there's a crowding out effect. And where the city council has decided this is the benefit that you're going to receive, not your employer. So employers will drop other things in order to be able to pay for the mandate. So that's why we think mandates are not a good idea. One quote that came from a participant in our conference said, after a while I look at all these rules and I think to myself, well, who's running my business? Is it me or is it the state? So we think employees should have the flexibility to have the benefits that work best for them. In closing, again, you can probably tell that our point of view is for policymakers in the legislature and in local government to respect citizens' decisions about how they want to run their own business. Think of people who are unseen. This is something I often bring up in public policy. A lawmaker will tend to be influenced naturally by the special interests or the lobbyist who's sitting in his office making a pitch. But lawmakers are true representatives. I mean, that's why you want to serve in public office. And representing means thinking of the people who are not in your office right now, thinking of the people that you're not hearing from, your constituents back in their districts. In the case of small business, the reason you're not hearing from them, they're busy running their businesses. You know, many of them don't have time to go to Olympia, and they're certainly not going to do it on a regular basis. And then I'll end on a lighthearted note, which I think is also important, and that is, again, try to put yourselves, and many of you have had this experience, I think, of starting on an enterprise of your own. It's exciting and intimidating at the same time. What's required for any human enterprise to succeed is that driving enthusiasm. And you know, there are always rules and taxes and paperwork and filings to fill out. Everyone understands that. But as that burden grows, you have to think of what the human impact is on entrepreneurs across the state. And that is, it just sucks the enthusiasm out of the entire idea. I wanted to break away and start my own business. I have a certain amount of experience. I have people who are willing to invest. I have 2 or 3 people that I can hire. I can go online. I can advertise. This is going to be great. I'm going to be my own boss. I'm going to be independent and make money. And then it's like wading through molasses. As you go through the process, okay, that fun element I was describing begins to get dampened, and there are certainly people who give up, and it also just makes it harder to get your business to the point where it's profitable and can survive on its own.
My name is Finne. I'm the Director for Education at the Washington Policy Center. And before I get started, I want to point out to you 3 inserts on the left-hand side of your packet. And to help you the most in your races, which of course is our key thing right now, if you look at our education reform plan, it describes there what the Washington Policy Center thinks are the 8 most important things to do to improve the schools. And we've studied this at length. This is based on a lot of research and a lot of thinking. And we've decided that the best way to improve the schools is to remove all the impediments that principals have to focusing their schools on student achievement. Right now, we have passed so many laws. There are so many bureaucracies. There's a lot of well-meaning regulations that are intended to improve student achievement that actually undercut the authority and the autonomy of a principal to control his dollars in his budget. He doesn't control the actual dollars in his budget. He gets an assignment of staff in his school. He doesn't control the teachers who teach in his schools. They are assigned to him by human resources departments and district bureaucracies, and he's not allowed to create the educational program that he thinks is best suited for the particular population of students that are in his school. So that's our main idea, that is very easy to communicate, very commonsensical, and is exactly what we're not permitting in our school today. And our other recommendations to break up the regional monopolies that are our school districts are to give parents more choices, including charter schools, tax credit scholarships, education savings accounts, so that parents have more control over where their students attend. And that idea has been is growing by leaps and bounds in other states in this nation. And as you heard from Paul yesterday, there was an initiative filed, and I'll get to that, and I'll discuss that a little bit in more detail, that would permit, is going to ask voters to vote for the 4th time on allowing charter public schools in Washington State. They have 6 weeks to do this. They have to gather 250,000 signatures. It is a major effort, but if they do that, the polls show that 60% of the state favors allowing parents this option. Only 25% of the polled people are against charter schools. There's still a very strong contingent that is against any change of any kind to our public school system, and they will be putting out misinformation. So I will give you some resources so that you can be knowledgeable on this issue, because you're going to be asked about this for sure. Okay, let me get started. I'm going to give you a crash course on education policy in Washington State. So I'm not going to cover every point. If you're interested, I can send you this PowerPoint later. There are a lot of dollars and numbers in this. So don't expect me to read everything out, but I'll just give you a great big overview on the top. Here is the first I'm going to describe to you the inputs, which are the number of students. We have about 1 million students in Washington State. 100,000 of those, 1 million are educated in public schools in Washington State. 100,000 attend private schools or are homeschooled. We spend from all state, federal, and local resources, $10.2 billion on our schools, up from $8 billion in 2005. Between 1980 and 2010, we've increased spending from about $6,800 per student in 2010 numbers to $10,200 per student. So every year, I'll show you with a slight drop in the previous 2 years, we've been increasing per pupil spending in education. The central characteristic of our public schools is that they're controlled by top-down central mandates, and so the result, and there are many bureaucracies that are skimming the money off the top before the money gets to the classroom, so that the end result is that only 59 cents of every dollar actually gets to the class. Part of the problem is that so few of the actual public school employees are actually classroom teachers, less than half. Over the last 10, 15 years, we've been adding certificated professionals that are outside the classroom to assist in the class, and that is why that number increasingly drops every year. The average teacher pay is $61,000. That includes about $10,000 in local levy supplementation to teacher pay. This is the big number that always gets left out, that no one discusses. The state is always being accused of underfunding public education. No one ever discusses the fact that local levies are providing nearly $2 billion in supplemental funds to increase teacher pay, administrative pay, and provide various things that local school districts want and need. So the total salary and benefit cost of the average school teacher across Washington State is $79,000. If you look at some of the richer districts like Seattle, teachers are paid an average of $70,000. If you add in the total benefit package, you're getting up to $100,000 in pay. We think the teachers should be paid more, the best teachers should be paid more, and that there should be some way to reward the best teachers instead of treating all teachers as one-size-fits-all, because they're not. Just so that you know the facts, and I'm not sure this is a good thing to really discuss when you're running for office, but you should know the facts. And that is that over the last budget, we've increased public education spending from $12.9 billion to $13.6 billion. That's a $653 million increase, and a great percentage of that, the numbers are not out yet, but there's between $300 and $400 million increase to fund teacher pensions. In higher education, there has been an actual cut of $360 million over the previous budget, from the previous budget. Now this is something now you can't see the whole sheet, but you remember when Jason was here, he took you to fiscal.wa.gov. If you click on K-12, you can get a statewide, and then click on statewide, you will get this wonderful sheet of numbers that tells you over the past 5 years what we're spending in public education in Washington State and where the money is coming from. So you can see that over the last few years, What the federal government, as others have described, have pumped in about $1 billion for the K-12, and and in the last 4 years, local districts have also added about $500 million to total public spending in public education to offset the reduction that the state has put in public education. At the very bottom of this sheet, you can see the per pupil spending has gone up every year with the exception of, I think it was 2009-10. You can also get this in that same place at fiscal.wa.gov. You can get this same sheet for every district, every one of the 295 districts in the state. So you can see for yourself what that district is actually providing in per pupil spending. Now, the richest district is Seattle. They're providing about $13,000 per student, and then some of the other districts are down at $8,000. Most district the average amount is $10,237 per student. So that's what we're putting into the schools. And now we have the results, which are below what they should be. Only in the 10th grade, the 2010-11 state results show that 83% of the students are meeting standard in reading, 86% are meeting the standard in writing, 62% meet the standard in math, and only 50% meet the standard, that's the state standard tests in science. And when you compare that to the national test, the NAEP test, which is considered the gold standard of testing for 8th grade, Washington students score slightly above the national average. OSPI will always say this shows that we're doing better than everyone else. Well, that's only because the demographics of our state are not as challenged a population as many of the other states in the nation, and so that's why we come above average on this NAEP test. But that average is nothing to be proud of. Only 40% are proficient or better in math, and only 37% proficient or better in reading. You've heard about this. K-12 education has to improve. These are the numbers. There's a serious achievement gap between white and minority students. The black and Hispanic students are 30 points behind in these subjects. And this is the last page on student achievement, but just so you know, a third of students are dropping out of high school, a third graduate without the skills they need to succeed in college or the workplace. 52% of the students that are here, that are coming to community college here, have to take remedial courses in math, reading, and English. 37% of the students attending universities have to enroll in remedial courses. Only 53% graduate from college. Washington ranks 43rd in the nation in college graduation rates and spends $17 million in remediation in community and technical colleges. Okay, so instead of going over past top-down efforts to reform the schools from the federal government and the state, I thought we'd just start with what we think should be done. And putting control, placing trust in the local most adults that are closest to the students, we think that would work. The approach of policymakers at the state and federal levels is to distrust what the teachers are doing and what the principals are doing. And if we could shift that mentality and say, we're no longer going to distrust you, but we're going to give you the tools and the flexibility and the autonomy and the budget control you need to deliver what is needed for students, you can do it. And ironically, charter schools is demonstrating that in spades, because that's what they're doing. They are giving local principals and teachers control over their budgets and educational programs. And with that control and flexibility, they've achieved incredible results for even the most disadvantaged students. So this is what we'd say, what would Washington Policy do? Unshackle the school principal. Take off all those strings and let him be a leader, and he will deliver results. And I think no one is talking about that. But what we have is a set of, I should have brought it with me, but I have the Common School Manual that sets up all the laws for Washington State, weighs 2 minutes left, weighs 10 pounds at least. Okay, and so those are the laws that you should be focusing on. When you become policymakers, start getting rid of those laws, because those are the ones that are shackling the principal. Okay, so we say, I've already said this, give parents more choices. I've said that. Now, the Charter School Initiative filed yesterday. What is a charter school? It's a public school, okay? It is tuition free. It is open to all students. Charter school principals are allowed to control their budgets, select their staff, design their educational programs to meet the needs with little or no central bureaucratic control. Charter schools hold administrators and teachers accountable for student performance. If those schools fail to educate students, they're placed under new management. And I've already heard the misinformation out there. They're saying that charter schools are unaccountable, and that is not true. We can benefit from the 20 years that other states have experienced charter schools by putting in multiple charter school authorizers. That is the way to get the highest quality charter school providers in our state. And okay, before I go from there, I want to just point out Chad Mangadance, who is running for a position and was one of the Magnificent Seven that convinced the Washington State PTA to endorse charters in its legislative platform last October, and also to make it a permanent member of the platform just 2 weeks ago. So Chad, that was fantastic. What'd you say? I'm sure you have. Yeah. Yeah. Yeah, it's fantastic, and that's what shifted the whole state. When policymakers saw that the PTA was now in favor of allowing charter schools, that's when a bill was entered in this last legislative session by a bipartisan bill by Eric Pettigrew and Glenn Anderson in the House, and Steve Litzo and Rodney Tom in the Senate. And that is the bill that was referred to that was blocked by the chairs, even though there were sufficient votes for it.
My name is Mike Ennis. Good afternoon. I'm the Transportation Director at WPC. Leave gave you a crash course in education, and forgive the expression, but you're going to get a crash course in transportation also. So the two documents that I'm going to be referring to, and you should refer to them also as we go along, are in your packets. The first one is our 5 principles to a responsible transportation policy, and the second one is a roadmap for mobility, and I'll cover both of them in my presentation. So I learned very early on that I'm not very good at jokes, so this is going to serve in place of my joke. This is a chart that Mayor McGinn used quite a bit a couple years ago in his opposition to the deep bore tunnel replacement of the viaduct. And he tried to make the efficiency argument against the viaduct, saying it costs too much and moved too few people. And he compared it to 2 other bridges in Seattle, the Ballard Bridge and the South Park Bridge. And you can see quite clearly the point he was trying to make. However, what he does not tell you is that he also supports light rail. And if he's trying to make the efficiency argument with the viaduct, then he's got a very glaring logical problem with his support of light rail, because it is even more inefficient than the viaduct is. So that's my joke. Incidentally, the most efficient bridge that we have on this list is the South Park Bridge, and it's currently closed. The city officials could not afford, they chose not to fund its repairs before they had to close it. The repairs cost $134 million. They did, however, fund a streetcar line on First Hill that coincidentally cost the same, $134 million. That streetcar line is going to move about 3,000 people per day. That bridge that's now closed moved 20,000 people per day. We make the argument that you should invest resources proportional to demand, which is one of our 5 principles, and we'll go over that here in a moment. Sprinkled throughout this document are some poll results. We run a statewide poll about every other year for the last 3 years, testing the message of congestion relief. Congestion relief, as you'll hear in a moment, is not a policy goal in Washington State. We obviously think it should be, so we wanted to test how important the concept is to voters. So we're going to go over a couple of those questions, and you can see the results of the 3 polls over the 3 years that we've done. The green column is the most recent addition. These are the questions that we ask verbatim statewide. When spending your transportation tax dollars, do you think the state government's first priority should be to reduce traffic congestion or fund other transportation needs? You can see the results of the 3 polls over the 3 years. Most people think that we should reduce traffic congestion over fund other needs. We did not define what other needs were. And you can see a declining support for reducing traffic congestion, and I think this is clearly a result of the recession that we're in. Traffic congestion, as we saw the other day in a new study, is 30% less than it has been over the last couple of years, clearly because there are less people driving to work because of high unemployment rates. The cross-tabulation data for this question I think is very interesting. And what we did here is we broke the respondents into different areas by region and then a party affiliation. And you can see how each of the different subgroups answered the question, reducing congestion versus funding other needs. And they're quite typically what you would expect. The column that I think is most interesting is this last column. It measures the difference between these two answers and how the subgroup answered that answer. In other words, it measures the level of commitment each of those subgroups have to their answer. So anything between 0 to 10% means that group is committed to their answer. Anything between 10 and 20% is they're very committed. Anything over 20% is they're extremely committed to their answer. And if you look at the subgroups of party affiliation, you can see that Republicans, or those who identify themselves as Republicans and independents, are very committed to reducing traffic congestion. Those who identify themselves as Democrats are very committed to funding other needs over transportation, bizarrely, in my opinion. So you do see a partisan divide in transportation policy. As you think about the government's role in transportation, how important to you personally is reducing traffic congestion? Not surprisingly, 2/3 of voters think reducing traffic congestion is very important to them. How would you rate the state government's performance on reducing traffic congestion? Not surprisingly, because traffic congestion is not a goal in Washington State, there's no relationship between spending and actually reducing congestion, which means we have a lot of congestion. 2/3 of voters think the state is doing a very poor job at reducing it. Would you vote for or against a major tax increase if you were convinced that the plan would reduce congestion? Now, this is an interesting question. The first 2 years that we ran this poll, we did see a tolerance for a tax increase to reduce congestion. The last time we did this poll, which was spring of last year, we saw a flip. Now, this is, I think, indicative of the recession that we're in and the economic climate and the pressure that people are feeling on their pocketbooks. So recently, there is a less tolerance to increasing taxes, even though there is even if there were a measurable impact on reducing congestion. So, and I think, as I'm going to skip this for a moment. This is a good description of what the two general philosophies are in transportation policy, not only in Washington, but across the country. We call this our Mr. Jones and Mr. Smith question. Mr. Smith believes state government should try to get people out of their cars and that we need to focus tax dollars on public transit. Mr. Jones, on the other hand, believes state government should focus on fixing traffic congestion. Congestion relief will help commuters get to work and thereby help the environment. And you can see that over half, pretty consistently, in the 3 polls that we've done, side with Mr. Jones. That the state should focus on reducing traffic congestion rather than forcing people out of their cars. So what we're going to talk about this afternoon, I'm going to try to give you different ways to talk about transportation. And as we'll get into in a little bit, transportation splits both sides of the aisle. They split Democrats and it also splits Republicans. Because you have those who think that they do see a correlation between a tax increase to fund transportation projects and economic development and jobs. And then you have those on the other side who believe that you should not have a tax increase no matter what, and that you should essentially starve the beast to force efficiencies. And there's some truth to both sides. So we're going to go over the 5 principles, 2 concepts, and 3 recommendations. This is sort of the 50,000 foot level, 10,000 foot level, and then really boots on the ground recommendations. These are our 5 principles, and again, you can follow along in this document here. I'm going to go through these pretty quick. So I think this slide probably violates every PowerPoint rule there is, but I like it because it gives a pretty good representation of what the law used to be. This bill passed a couple of years ago, and you can see where it said here, delay per driver shall be significantly reduced and no worse than the national mean. And then the one above it, I think. Traffic congestion on urban state highways shall be significantly reduced and no worse than national mean. That language was stricken and replaced with these 5 broad policy goals. They are listed here. Incidentally, these are the same goals that are identified in the Washington Transportation Plan, which are listed here. And in both documents, they define mobility the same way: to improve the predictable movement of goods and people throughout Washington state. Now, if you read that quickly, it sounds pretty good. However, if you pay close attention to the words, what this means is, as long as your commute is congested every day, as long as it's predictable, the state is meeting their goal. And that's unacceptable to us. The state auditor's office did an audit on the performance of the highway system a few years ago and concluded that congestion relief is not a goal in Washington state. We advocate that it should be a goal for obvious reasons. So our number one principle is tying spending to congestion relief. If congestion is not a problem in your area, then other performance measures, things like economic development, even trips, or even CO2 emissions. Incidentally, in Texas, their number one recommendation is reduce congestion. In Washington, it's not even on the radar screen. Number two is respecting people's freedom of mobility. A couple years ago, I was on a panel. We were debating the roads and transit measure that ultimately failed in 2007. And we were at Seattle University, and on the panel were several environmental groups. And a question was posed to us: how do you define the relationship between land use and transportation policy? Very clearly, there is a relationship between the two. What happens in one affects the other. And the guy from the, I think it was the Sierra Club, said he had a very utopian vision on how the two related to each other. Now, as a free marketer, anytime somebody says they have a utopian vision, the hairs on the back of my neck stand up. And he said that the government has a role in where people live and where people work. Well, when the question came to me, I said, well, actually, I have a very different answer. I don't think the government has a role at all in determining on where people work and where people live. And afterwards, the Seattle U law professor came up to me and he said, just where do you get this idea of people being able to choose where they live and work? Now, I'm not real good at coming up with answers to questions like that, but this time I had a pretty good answer. I said, well, actually, it's pretty easy, Professor. It's called freedom. People have the freedom to choose where they work and live on their own. And this was his response to me. That's preposterous. It doesn't sound like a place I want to live. So this is another reason why we think our second principle is respecting people's freedom of mobility. And I think actually I would amend this to define mobility a little more specifically: personal mobility. Number three is investing resources based on demand. This is the current model that we use, the build it and they will come model. Now, this doesn't mean that public transit is good, doesn't mean public transit is bad. All it does is it recognizes a performance gap between cost and benefits. Otherwise, the private sector would be running such an activity, right? If there wasn't that gap, we argue that the performance gap between the two should be very narrow. But under the build it and they will come model, you're building supply of transit before there's an equal willingness to use it. And when you do that, your mode share, your fare box recovery, and your ridership are all low. Sound Transit is a great example. We're spending billions of dollars on a program that's going to move less than 1% of all daily person trips. Their fare box recovery is also under 20%. So what we argue is that you should invest resources proportional to demand. All you got to do is think of that first graph I showed you between the South Park Bridge and the First Hill streetcar. Another slide that violates a lot of PowerPoint rules, I think. But it's a good slide. It has a lot of data in it. And what it shows is the distribution of taxes collected in the Puget Sound region only and how they're distributed between roads and transit. The green columns are roads monies, the blue columns are transit monies, and the red columns are from Sound Transit. So if you combine the red and the blue, you're going to get total transit spending in the Puget Sound region. And you can see here in the later years, transit represents about 60% of all transportation spending in the Puget Sound region. The PSRC, the Puget Sound Regional Council, estimates that public transit only serves about 3% of all person trip demand. Yet they're collecting 60% of all transportation resources, at least in the Puget Sound region.
What's that fuel tax?
Most of it is fuel tax. Second are fees. We'll talk a little bit about that here in a moment too. Our number 4 principle is improving freight mobility. This is a map that shows peak period congestion on the highway system of freight trucks today compared to 2035. So you can see all the red. Freight mobility is expected to decline in the next 20 years because of the increased demand on the road system. Rail volumes for freight is in the same position between now and 2035, which is why our 4th principle is improving freight mobility. Don't cause further harm. Replacing the center lanes on I-90 with light rail is reducing is causing further harm. Replacing the viaduct with 2 fewer lanes than what's there today is causing further harm. And then you can see our other recommendations. Number 5 is utilizing all financial tools available, which is a reference to public-private partnerships. There are dozens of examples of PPPs all across the country where they are successful. There is private money available for transportation financing. Our Speaker of the House in our legislature has a philosophical issue with PPPs that it's very difficult for the chair of the House and Senate Transportation Committees to get passed. They both do support PPPs, but for some reason Frank Chop does not. We argue that you should use PPPs. So the next document that I'm going to quickly cover is this one, a roadmap for mobility. We wrote this year in response to a possible transportation funding plan. It has 5 recommendations in it, and I'm going to cover 2 of those concepts here. Can anybody tell me who the most important person is in transportation policy? There's only one. Driver. You've heard me before, haven't you? Drivers are the most important user group in transportation policy. At the state level, they fund the transportation budget. That's right. There's no other group. Drivers fund the transportation budget. Public transit is a local function. The state does not fund public transit. Public transit has its own taxing authority, usually through the counties or federated districts, not funded by the state. The state does have some grant dollars that they give for capital programs, but it's not a lot. Generally, the state does not fund public transit. So, when we saw transit lobbyists this year trying to position the state into creating a state-level funding source for public transit, we became concerned. A state-level funding source is code for drivers having increased taxes and fees to subsidize transit, and that is wrong. The state already cannot fund its current transportation needs, all of the needs that serve drivers. Well, the 18th Amendment does protect gas taxes to highway purposes, which is a direct benefit for drivers. However, there's about $1 billion worth of fees also paid by drivers that is not protected by the 18th Amendment. The transit lobby wants to get access to these fees and raise them and then divert some of those new revenue dollars to fund public transit. That's simply unfair because drivers currently have $200 billion of unmet needs that the state currently cannot afford. If you're going to raise new revenue, it should go to drivers, especially if drivers are the ones paying that new revenue. So it's first recognizing drivers as a user group, and then secondly, protecting the taxes and fees they pay for highway purposes. And the second concept is public transit is not underfunded. Anybody know how many transit agencies there are in Washington? There are 31. 31 public transit agencies collected $2 billion last year. They make $2 billion per year. To put that in perspective, the state only collects about $1.2 billion in total gas tax revenue. Over the last 5 years, transit has collected $12.6 billion. Over the same time period, the state has only collected half that much in gas tax revenue. This is remarkable when you consider that public transit, statewide, only serves 2.4% of all daily person trip demand. So you're talking about a $2 billion revenue source that goes to support a system that only carries 2.5% of all trips. So I reject the concept that public transit is underfunded. They do not need a funding source, and they certainly do not need a funding source that's paid by drivers at the state level. So when you make it to Olympia, not if, but when you make it to Olympia, I want everybody to keep this concept in mind. Recognizing drivers as a user group and understanding that the state cannot fund their needs, and that any increase in taxes or fees that are paid by drivers should be protected for projects that benefit them, not other user groups. We've identified 3 areas in here where drivers are paying about $200 billion per year in taxes and fees that the state is diverting to non-highway purposes. This is wrong. Now, this doesn't mean that those programs that those drivers are funding are unimportant. They are. But what it does mean is that drivers should not be subsidizing them. Drivers have their own unmet needs. Those programs should be funded by the users of those programs or broader tax, or through broader taxes that everybody pays, not drivers. Like I said, drivers have their own needs. Yes, Anna, I see you. Our 3 immediate recommendations, so boots on the ground, that we would recommend. First, identify traffic congestion relief as a statewide policy goal. It's not. It needs to be. Make Sound Transit's governing board an elected body. Their governing board currently is appointed. There's a complicated process and law that defines who can serve on the Sound Transit Board. If you're not an elected official within one of those sub-districts, you cannot serve on the Sound Transit Board. That essentially insulates that body from the decisions they make. Sound Transit has made some very, they've overestimated their benefits and underestimated their costs to the public. And once they get the taxing authority, their promises start to fall apart. Nobody can hold Sound Transit accountable because they're not elected. Sound Transit is only judged on whether they spend their taxing authority. They're not judged on whether the costs come in on budget and whether they build their trains on time, both of which, incidentally, they failed miserably at. So we should make Sound Transit's governing board elected body so they can be held accountable. And third is constitutionally protect toll revenue for highway purposes. Like was mentioned, gas tax revenue is protected by the 18th Amendment, can only be used for highway purposes. Toll revenue should be protected in the same way for the exact same reason. It's paid by drivers. It should only go to projects that benefit drivers, not other user groups.
So I'm the environmental director. I used to work at the Department of Natural Resources with Doug Sutherland. I've been the environmental director since about 2005. Some of you I know. So I'm just going to tell you a few things about the environment, how the issue plays in politics, the choice between sort of the left's view of environment and the free market approach to the environment, and then some specific examples of what we offer as a better way to help the environment. So here's the good news for all of you. I don't know. You can decide whether it's good news. Here's the reality for all of you. When you ask voters what is the important issue, they list the environment dead last every time. Okay? Jobs, economy, transportation, schools, right? I mean, all those things are at the top. Transportation, just because they don't know what they're talking about, they don't understand the important things, they have screwed up priorities, but those, when you do your poll and you ask what are the important issues, the environment is going to be way down at the bottom. Okay, and those are people who typically have their minds made up about who they're voting for 7 years ago. Okay, because they tend to have a particular ideological vision. So the question is, why would any of you talk about the environment in your campaign? And here's why. Because when you ask, is the environment important to you, who says no? Nobody, right? Everybody says it's important to me. And so let me ask you this, Kristen. If I said, I want you to vote for me, hi, I'm Todd Myers, I'm a cool guy, I want you to vote for me, and by the way, I happen to know how you feel about every issue. And I will vote in Olympia the same way that you would vote. Would you vote for me? If you trusted me. You may not trust me. But if you said, but I said, I'm with you on taxes, I'm with you on jobs, I'm with you on business, I'm with you on crime, I'm with you on transportation, I'm with you on everything, would you vote for me? Yes, you would. I forgot to mention something. I'm a child rapist. Okay? Now, wait a minute. Why wouldn't you vote for me? I'm going to vote exactly the way that you want on every issue. So why wouldn't you vote for me? That's the way the environment is used. It is used as a disqualifier to say, what kind of person doesn't care about the environment? They may say they agree with you. They may look like they agree with you. But if they don't care about the environment, it's like shooting puppies. Okay? That's why the environment is important. That's why even though when you ask voters what the most important issue is, they never say the environment, and it's why candidates who run on the environment win. And it's why candidates use the environment in their campaigns. Because what it says is, if the other guy doesn't care about the environment, you just don't even look at anything else, because it just says fundamentally they're a bad person. Okay? That's what you have to, that's why it's an important issue, for you to have a clear understanding and position on. Okay. Here's the good news. The people who tend to run on the environment have really dumb ideas about the environment. Okay. We've tried them. They don't work. Okay. That's what I want to talk about. This is the contrast. The environmental left says we need to pick and choose technologies. We need to subsidize wind, solar, electric cars, hydrogen cars, right? All these sorts of things with lots and lots of taxpayer dollars. And when it doesn't work, the reason was we didn't give them enough taxpayer dollars. Okay? They want to force lifestyle changes, right? They want to put you into light rail. They want to tell you where to live, how to live. They don't like you living in the suburbs. They want you to live in tiny apartments in skyscrapers, right, in downtown Seattle, and let the weeds take over the rest of the roads. Right? That's what they want. But it's failed. And just at the most basic level, you can see it's failed. Washington State constantly talks about what a leader we are in reducing carbon emissions. From 2005 to 2009, which is the most recent data, Washington ranks 44th in the country in carbon emissions. We are one of the few states during that period of time to actually see our carbon emissions go up. Meanwhile, it's states like West Virginia that are seeing their carbon emissions go down, right? The states that everybody thinks of as being green and environmental. Right? We're doing horribly in this area. But Governor Gregoire talks about all the time what a great job they're doing, all the wonderful things they've done. And you look at the actual data and we're horrible. Puget Sound Partnership, her #1 environmental priority, is years behind schedule. They're now coming up with their second plan. Okay, and just today, I haven't looked at it yet, another report came out studying whether they've met their targets. Last year when they studied whether they met their targets, the governor implored them, I need you to do 3 things by the end of the year that we can point to. He said this on camera. Just give me 3 things that we can say that we've done by the end of the year. And they didn't meet any of those things. Okay? This is supposed to be the top environmental priority. We're failing. We're not even meeting the standards that they say that we should meet. Free market environmentalism, however. 1, provide incentives to do more with less. That is at the heart of what environmentalism is about. Doing more with less, using fewer resources, being more energy efficient, right? There is no more powerful force in the universe than the free market to do more with less, right? That's what efficiency is all about. Free market does that great. Innovation and technology is the way, not lifestyle. Let people live the way they want to live. They're going to anyway. And if you try to force them not to, they will find a way to do it. Give them more options, okay? And that's innovation and technology is the way to do that. A free market approach is more effective and it's more consistent with economic prosperity and personal freedom. So you don't have to say, I'm sorry, you don't get to live the way you want because you're a blight on the planet. You can say, you can live the way you want, but you have to take responsibility for the impact you cause, right? That's what conservatives and people who believe in the free market believe, that you have the freedom to do what you want, but you take the responsibility for the impact you cause. Right? When somebody shoots somebody, we don't say they had a rough childhood. We say you shot somebody, you go to jail. Okay? That's fundamentally what free market environmentalism is about. This is one example of that our current approach doesn't work. So transit spending is an effort to get people out of their cars. The Growth Management Act, right, is an effort to make people live the way you want them to. But the fact is that we see lots of people still spreading out, right? Growth management is not controlling growth. People are commuting longer. Our commutes, as you just heard, are getting more difficult. All these sorts of things. Growth management hasn't done the job. Technology, though, is what is more effective. So here is carbon monoxide, but you could do this with any air quality measurement. Here's what it is in Washington cities, Seattle, Spokane, Tacoma, Vancouver, in Washington State over the last 40 years. Okay? It's constantly going down. And the reason that this is happening, now what's happening at this time? Our economy is growing that whole time. Population is increasing. More cars, more people driving farther distances, right? Carbon monoxide is associated with automobiles. So why is it that we have more people, more cars, more people driving farther, and yet we have this? It's because technology has far outstripped all of that data. It's not because people are changing their driving patterns or their lifestyles or anything else. It's because technology is doing this. That's the way to focus, okay? We are far more efficient in terms of energy than we were 30 years ago. Between 1980 and 2010, the United States as a whole reduced the per capita energy use, per unit of GDP rather, energy use per unit of GDP by half. That's not because EPA said you need to do this. It's not because the Department of Ecology said you need to do this. It's because nobody wants to spend money on energy if they don't have to. They want to go to the movies with their family and buy popcorn. That's what they're doing. Okay. Here's one example of what happens when you try to pick and choose technologies. This is a map of California, and if you can see, there's all these little dots all over the place. And by 2010, there was going to be a hydrogen filling station at every one of those dots so that we could drive our hydrogen cars throughout California. You wouldn't have to go more than 20 miles along the California highway without a hydrogen filling station. So I called them in 2010 and said, how many do you got? And they said, 15, not the 200 that they promised. Okay? So I-5 is our hydrogen highway in Washington State, and in conjunction with the Vancouver Olympics, they were going to have a hydrogen highway all the way from Mexico to the Olympics. And this is a lovely quote from King County planner who said the goal is to be ready in 2009 for a rally up the hydrogen highway from the Mexican border to the Olympic Village. I don't know that they've left the Mexican border. It's a very slow rally. And the senior policy analyst said it has a potentially big impact to the economy. Yeah. That's what happens when you get sucked into the trendy environmental ideas, when you try to pick and choose technologies. Right? We tried to pick hydrogen as the glorious new fuel of the future, and it didn't work. This is the chart that I just told you about. CO2 emissions per unit of GDP have fallen. This isn't because we have a CO2 policy. It's because we use less energy. I'm going to skip the rest of that because I want to keep going. Yeah, let me just give you one last example. City of Seattle bragged that over the last decade, they've reduced per capita carbon emissions by 17% in the city of Seattle. Okay? Now, Greg Nichols was the founder of the U.S. Conference of Mayors Climate Protection Agreement. Right? He constantly talks about how they're reducing carbon emissions. City of Seattle says that its energy is carbon-free, 17% per capita reduction. During that same time, the United States as a whole, under the evil leadership of George Bush, who did nothing about carbon emissions, reduced its per capita CO2 emissions by 23%. So why is it that the United States, without a carbon policy, did better than Seattle, who cannot shut up about their carbon policy? That's exactly right. It's because carbon is associated with energy, and we don't want to waste energy. And the natural progression toward improving energy efficiency in the free market does better than the carbon strategies. So here we have some recommendations for effective environmental stewardship. I'll talk about 3 of these. First is develop a personal incentive to reduce greenhouse gas emissions. Second is reduce costly and ineffective green building mandates. Third, complete a comprehensive review of the Growth Management Act. Ensure the state is receiving the carbon emissions reductions it pays for using what we call the Climate Accountability Act. And analyze Washington's environmental priorities with a cost-benefit analysis of the state of the top environmental expenditures, so that you know that for every dollar you spend, you're getting what you paid for, and that you're getting the most bang for your buck. So I'm going to go over just a few of these. Green school mandates. So you've probably heard me talk about this before. If you've ever heard me talk about it, I yammer on and on about it, so one more time won't hurt. In 2005, the state passed a law requiring all schools to meet what are called green building standards. There are a variety of different standards. We basically use 2, one called LEED, Leadership in Energy and Environmental Design. It's very popular with construction, and cities want to mandate it. Or what's called the High Performance Building Standard, which is more targeted towards schools. So they said that schools were going to save 30 to 50% in energy, that there would be healthier buildings, and that test scores would go up 10% in the schools. I am not making you laugh, but I'm not making that up. That's what they testified. Okay. So we looked at the various schools across the state, and we compared the newest green schools to the most recently built non-green schools in that same district, right? Because you're getting buildings of a similar size, similar elements, similar, the same climate, all of those sorts of things. And what we found is that in virtually every school district, Bethel is the only exception, and I think actually Lake Washington just built one that breaks the rule, but in virtually every district, the green schools use more energy per square foot than the non-green schools in those same districts. I can explain why later if you'd like. The advocates for this didn't believe me. They say, we know Todd. He's untrustworthy. He doesn't have much hair. So we're going to have the state do the research. So JLARC, which is the Joint Legislative Audit and Review Committee, it's sort of like the GAO for the state, looked at it. They looked at 9 schools. They found that 5 of the 9 schools were worse than average. Okay. Now, many of these average schools are like 20 years old. We're building new green schools that are worse, on average, than 20-year-old schools in terms of energy efficiency. Test scores, by the way, did not go up. We compared green schools. So some of the work that Leave did, where she got a hold of the statewide rankings from 1 to 7 of every school in the state. The state made the rankings, not Todd, not Leave, not anybody else. So we used their data, compared it to the green schools. We found that the green schools, in terms of achievement ranking from 1 to 7, are slightly worse than the non-green schools in those same districts. It's very close. So do I think green schools make kids stupid? No. I think they make politicians stupid, but they don't make kids stupid. It's negligible. It just doesn't, there's so many other factors that are so much more important about student achievement and education and things like that, that it's a non-issue. The problem is that we're spending 2 to 3% extra to build these schools this way. And so for a $25 million elementary school, you're spending $750,000 extra to get What? Nothing, right? To have higher energy rates. That's one. Second, climate accountability. So when you see projects like that, you want to know, what are we spending our money for? And so what we proposed was the Climate Accountability Act. A lot of the projects are not audited. The requirements to meet those targets are not in the contract. So the state hires a company to do a project and then just walks away and claims victory, whether it helped or not. And so what we proposed was the Climate Accountability Act, where you actually have to put the CO2 targets or whatever energy efficiency targets in the contract. Okay? And then you go back and you audit, are we achieving that goal? And if you're not, then the contractor has to meet the contract and make amends. This will have two effects. One, right now, people come before the legislature and they say, if you pass this regulation which favors me, you'll save 30 to 50% in energy. Okay? And I say, great, put that in the contract. And they'll go, no. 30 to 50? What I meant was like 5. Okay? It'll force them to be more honest about what they can actually achieve when they're on the line for it. And so legislators and policymakers will get better data about what's achievable. The second thing is, we'll get what we pay for. If they say, here's what we can do, and they don't do it, they have to make that up. Okay? Last, Environmental Priorities Act. How do we make our priorities in Washington State right now when it comes to the environment? Anybody know? The Washington Conservation Voters goes down to Olympia and says, here's our 4 priorities, pass them. How did you make those priorities? We sat around and we decided that these were our priorities, pass them. Okay? So we did a study, which is not here, called 5 Years of Environmental Policy, Are We Making a Difference? I went back and looked at the last 5 years of all of those things that the WCV had said we have to pass and that had actually gotten passed, and then whether they actually achieved the goals. And we found that overall, they did actually more harm to the environment than good. Policies were abandoned. They simply went unfunded because people decided a year later that, we don't really need this. It's a mess. We don't have a lot of money to waste. I don't know if you've noticed that. So the way that we need to set priorities is to make sure that we're getting the most bang for our buck. And the way to do that is to go through and make sure and rank our priorities and where can we get, what is the largest threats to the environment and where can we make a big difference. Okay? So here's one example. When the governor did her climate change executive order, she swept $1.6 million out of other projects, including taking people away from doing air permits. And so it said, her report said, communities would continue to be exposed to air pollution, newer expanded business would face stricter pollution control requirements by the state, and they might suffer federal sanctions. Another one was slower response to business and industries that need air quality permits to start or expand operations, killing jobs. Another one was to reduce money for toxic cleanups. We won't be able to identify and assess and respond to toxic hotspots and won't be able to develop in response and reduce risks from toxic like benzene, chromium, and formaldehyde. Okay? We took $1.6 million away from projects like this. You've already seen our CO2 targets, right? How are we doing? Horribly. We took $1.6 million to do badly on CO2 emissions and then have all these impacts. That is the wrong priorities. We need we need a group together of scientists and economists to say what's the most important issues and where can we get the most bang for our buck. That's the Environmental Priorities Act. The combination of focusing on personal incentives, technology as opposed to lifestyle, and getting the right priorities is the best way to help the environment. And the first rule of AA is what? Admit you have a problem. Okay? We've got a problem. We're not achieving the environmental goals that even the environmental left says they want to. Once we admit that, then we can say, how do we do it? And the free market approach is the way to do it. All right?